Hey, good morning, everyone. Let's do the stock market open live stream. I'm Victor, and this is the Victor H Investing live stream. I'm more of a long term investor. I like analyzing companies, looking at their free cash flows, and trying to determine the value of a company, kind of the mathematical way, then comparing it to the stock price and seeing if it's a good buy, hold, or sell. I also look at earnings per share. So I like to really analyze companies, and that's what I do on my channel. Looks like the stock market's going to open in the green. We had a red day yesterday. It was interesting to see that we had kind of a pumping of the brakes for the stock market. We were enjoying a 7 to 8 day rally, and bang, we hit a wall. It'll be interesting to see if we can really open on the positive and stay positive. I would not be surprised if the market opens higher, fades, and then gets into the red, because I don't know that the concerns have been put to rest. The concerns around recession coming. I think it's a reality that hey, we've had a decent economy. In some respects, it's been an artificially good economy because the government pumped so much money a couple of years ago into the economy and caused it to grow artificially by putting a lot of stimulus dollars in people's hands, which drove spending and so forth. It really drove up car prices and so forth. But we're seeing things slow down. You're seeing more job losses. You're seeing that even real estate, you're seeing higher inventory of houses for sale. And those are signs that things are slowing down. We're seeing unemployment go up, and that tends to go up very quickly. It doesn't just kind of subtly, begin to increase. It grows up fast. So having said that, I think the stock market, I think the big investors, institutional investors, smart money is looking at that saying, all right, so maybe we take some chips off the table. Maybe we sell out of some of these stocks that are really highly priced. We'll see. We'll see what happens in today's open. I'm not quite sure what's going to happen. Frankly, I could flip a coin and probably be more accurate than trying to be smart about it and guess at it. So we'll see what happens. There are a few stocks that I wanted to take a look at this morning, and anybody that wants to tune in and let me know if you want to talk about a stock or you want me to talk about a stock, just tune in, put it in the chat, talk about it. Good morning, Trader Pratt, excuse me. Hopefully you are doing well in the beautiful city of Toronto. I visited your city. It's an awesome city. Let's take a look here. So I don't think there's any suggestions on stocks to look at, but one stock I wanted to look at is Snowflake. So Snowflake yesterday had a very, very tough day. It was down 14.7%. And this is a company, they provide cloud-based data platform, and they're in, call it the data management, consolidation of data for analytic purposes, or companies want to have their data pretty much consolidated in one place. And they're somewhat of a new software company. They came into the market a couple of years ago, and they came in at really high stock prices. They were supposed to be this awesome company. In a lot of respects, they did come in with some really good ideas into the space, but they've had a tough year. And the word on the street that I've heard is that their software has been hacked a few times, and security has been really, really important in 2024. CrowdStrike caused the biggest computer outage in the history of computing. So they're the champ. They're the champ of causing outages. And the same thing when you look at assessing impact of cyber attacks on Snowflake. So Snowflake's a newer company, and I'm not sure if they've hardened every security aspect of moving data over to Snowflake. But if you follow the trail of companies that have used Snowflake and have been hacked and they've had their data taken, it's a pretty bad story. So let's kind of do a quick search, Snowflake hacks. So Snowflake hacked. So they've just been breached a few times. And just off the top of my head, I know that companies, I believe AT&T's hack, that was massive. That's like everybody who's on AT&T, their data was taken, and that was compliments of Snowflake. And I believe that Ticketmaster, Live Nation was in the same boat. So this is the big issue with Snowflake. And we can look at the numbers all day long, but what I first want to know is this a healthy, good business, right? You don't want to buy a bag full of problems. So you want to make sure the balance sheet's good. But you also got to look at the background of a company. It's so much like hiring somebody. You want to understand what was their track record and their employment history. This case here, those are big, significant issues. How is that going to affect their ability to get new customers? How will current customers be affected? Because I'm sure AT&T is looking for ways to get out of, I guess, their use of Snowflake, because they just got hammered. And I'm sure AT&T is going to be dealt a lot of penalties by the government, as they should, for not protecting data. My data has been compromised thanks to AT&T and our friends at Snowflake. So they had an earnings announcement. I think the earnings were decent. If we look at the earnings, financially, I think they came in as expected. The company has been a growth company. You can see their growth is really good. And now they're a significant size company, $3.2 billion. Let me see if I've got there. Yeah, here's the latest growth. They grew nicely. They have a loss there. I wonder if they're reserving. And I'm going to go to the Snowflake investor relations page and see what they're saying about their earnings and what they are saying they're going to do about all these hacks. And I haven't analyzed Snowflake. I've been super busy trying to keep up with everything else. So this is kind of fresh out of the box here. So Snowflake reports they have good growth year over year. They have a lot of, global big customers. Okay, fine. And the thing about, Snowflake is they sign long-term deals. So it's harder for customers to just pick up and leave. It's not like, your McDonald's and you serve bad hamburgers and people stop showing up. No, there's contracts. So their customers may be on the hook for 2-3 years. And unless they can show that they specifically have an issue with their contract, they're not allowed to leave. But overall looks good financially, right? They're growing. They delivered a strong quarter. Okay, that's interesting. I want to see their financial outlook. Growth of 22%, which is a little slower than what they put out for Q2, right? They're at 30%, but only 22% for the next quarter. They have a stock repurchase program. And I wonder if they're talking about the hacks and what's going on with that. Looks like they didn't put it in print. I'm sure they were hammered on it on their conference call, because that's like the biggest issue that I see with the company. They are producing free cash flow. Looks like cash from operations for 25. They don't have to put much capital back into the business, only 21 million. So they have free cash flow for the first 6 months of 400 million. That's very good for a young company. Again, all these numbers are great, but I always look at companies that I'm going to invest in. And one of the big questions I have is that a desirable business? It's one thing to buy into a business and be excited about, their growth rates and look at their numbers, but you're going to be a part owner. So having said that, do I want to be a part owner in this business, or is it just too troublesome and it's got too many problems? They're probably not going to be able to, get over on these problems. So, right now Snowflake to me, it has too much radiation. It's like, okay, you guys got to figure this, hacking problem out. You got to convince me that you're not going to have any more hacks, because, if your systems continue to be penetrated, you're just going to have more and more problems. So that would be the first question. And they did not, I'm not willing to invest based on that criteria. Their numbers do look good. When we look at a valuation of this company, I value companies on free cash flow. And when I look at free cash flow, it's 400 million for the first 6 months. So if I double that 400 million, let's say they do 800 million of free cash flow for the, let's say the trailing 12 months or the next 12 months, I should say, their valuation is about 38 billion. Okay. And probably the best valuation I can give these guys is 20 billion, because I'm multiplying, let's say 800 million times, let's say 25 or so. And I get to about 30 billion. But again, I have that big problem, which is, hey, you guys, your business is like really being under threat of all these security breaches and data being stolen by these big customers, right? Or from these big customers. So having said that, this one's here, not investable for me. And the market is aware. It's like, okay, you put up really good numbers, but we're going to sell you off. So we'll see how this goes. But, we've had other stories where businesses were doing great. I mean, a classic story, going back a ways, but Facebook was not the dominant social network first. It was, what was it? The original company was Mind, or a ShareSpace, or there was another one. And they got into trouble because they had pedophiles targeting kids. And what ended up happening was the market share leader uh, they got into trouble, and then Facebook pounced. Facebook was able to take over. So let me find that company. MySpace. So MySpace was like super popular in its day, and then they had big issues. You know, pedophiles were targeting kids, and obviously that can't happen at all. If it happens once, it's too much. And when they got entangled in all that mess, um, our friends at Facebook took over, and Facebook was behind MySpace in market share. So, is something similar going to happen to Snowflake? I don't know. I don't know, but I could tell you these are significant problems when you have as much data being breached out of AT&T customers. It becomes a giant, giant issue. So we'll see how this evolves. All right, so that was Snowflake. Let me touch on our friends at Zoom. I'm a Zoom stockholder, and Zoom really surprised me to the positive, right? Um, I looked at their earnings and I saw, single digit growth. And frankly, I was disappointed. I'm like, why can't you grow at 10%, double digit, 15%? They're not a massive company. Like Meta grew double digit. They're a massive company. And so did Google, and all these massive companies were growing at a higher rate than Zoom. And I feel like they're a one trick pony. They just have one business and that's it. And that's kind of a vulnerable place to be. But the market said, hey, the market really liked their cash flow, which I love their cash flow. Their cash flow is awesome. So long and the short of it is went up substantially yesterday, which surprised me. I'm glad because I've been a stockholder for a couple of years thinking that, with the Zoom story, it's quite amazing that the stock market will take a company. In the case of Zoom, right? During the pandemic, these guys were on fire, on fire. They went from, $62 a share up to $496 per share, almost an 800% gain in less than a year. Wow. Awesome. And then the market said, well, we don't think you're going to keep all those customers and we don't think you're going to sustain that growth. So we're going to sell you off. We think you're worth 10 cents on the dollar. Jeez, that's a discount. So I saw that as an opportunity to pick up a company. And I've done that with other businesses like Meta, Google, Uber. I mean, I've made money with companies where I thought that their solution, their technology was good, and they were sold off substantially. This one has not risen. This one's been one where I'm a little amazed, frankly, because when we look at Zoom, you look at their business, right? It's continued to grow, even though they had this incredible growth. You don't see any red on the screen. You see positive growth on the revenue. So why is it that this stock is being hammered by the market and has stayed down when other stocks have really risen, especially the major caps, right? So the Googles and the Microsofts and the Metas and the Apples, they've just kind of flown up and to the right. These guys went from $622 million in revenue, and now they're a $4.5 billion revenue company 5 years later. That is phenomenal. And actually, that's about 4 years later. To grow a business that fast is like A plus. And they've done it making a ton of profit and a ton of free cash flow. All right, A plus, A plus. Balance sheet, they have $7 billion of cash on the balance sheet and no debt. They are a $21 billion market cap company, but $7 billion is on the balance sheet. You're getting this company at such a discount. It's freaking ridiculous. So I bought into Zoom. I've been amazed that the stock hasn't done any better, because when we see other businesses that, have, I'll show Uber. Uber's done really well. And Uber, I love Uber. I own Uber. I own their shares. Not selling them, buying more. But they suffered a similar fate, which was, hey, you know what? And at this, here, the market said, Uber, we don't think you're that cool. We don't think you're that good. We don't think you're that valuable. We're going to sell you off by 65%, 35 cents on the dollar. And me, along with other investors, said, hey, thank you very much, Mr. Stock Market. Appreciate the discount. I will buy Uber, sir, and make lots of money, because this is a very valuable business. These guys don't generate as much cash flow as Zoom. They're not as profitable as Zoom. They're awesome. Not selling my Uber stock. But when I compare this proposition of being an owner of Uber and an Uber of Zoom, I'm just amazed that this business is not priced higher, because they make so much freaking cash. Cash is king. when you look at the most valuable companies on the stock market, when we say, hey, what is a similar attribute when we look at the most valuable companies on the planet? When we go to Apple, huge free cash flow. Microsoft, huge free cash flow, huge free cash flow. And I'm going to keep going, so I'm not going to be a broken record. Let's take a look at our friends over at Apple and look at their cash flow statement. And this is why the market says, Apple, you're worth $3.4 trillion, is because you generate $104 billion of free cash flow in the trailing 12 months. And you've grown it from $58 billion of free cash flow. And keep in mind, 58 billion is like the size of a large company. And they generate this kind of cash. Amazing. So when you generate high free cash flow and you can show growth, the market tends to price those stocks highest. So you can go down the list of the most valuable stocks and you find out free cash flow is that barometer that gives you long-term stock price appreciation. Having said that, why has Zoom, which let's take a look at their free cash flow. They went from $113 million to north of 1.7 billion. They 10x that freaking number. Woo, beautiful, baby. So that's why I'm a little amazed that Zoom hasn't done better over time. It's good to see they're up 2.2% today, and they were up a lot yesterday. That's good. They're winning the day. Awesome. So it looks like Trader Pratt, you're locked and loaded for this Friday. I hope we make lots of money today. Let's see what's going on with the stock market here. Okay, we're up. We're up. Very nice stock market, because last 5 days looks like, so today is going to dictate if we're going to have a positive week or a negative week. We had a nice couple of days, and then we had a terrible day yesterday with stocks being sold off, and it looks like we're up 0.8%. Again, I would not be surprised, because the market tends to do this, is you have buying activity early, and then the smart money kind of says sell, 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 and then stocks start, selling off. So it's referred to, I think, as a head fake. I'm not hoping for it. I'm just realistic. I've been investing in stocks for 30 plus years and could just say, hey, wouldn't surprise me if it did a head fake and we end up in the red. We'll see. We'll see. I would be surprised if this rally keeps going. This rally is, I'm in favor of stock markets that go up and to the right. Totally in favor. 56% over the last, call it 2 years on the S&P. Doubling of money in the S&P. Thank you very much, stock market. I'll take it. Love seeing my portfolio of stocks go up in value. But this is not completely sustainable. We have corrections like in 2022, we had a market that sold off on the S&P of 25%, and the NASDAQ was even worse. It was in the mid 30s. So we have corrections because stock prices get too high and then the market sells them off. And the market is not rational. It's not like common sense comes into the picture. It's groupthink, it's momentum based. And I showed you examples of like Uber. It was sold off by 65% and then it rose 250%. That's how irrational the market will get. And let's use that in our favor. We know the market's going to behave that way. So when it sells off, we buy, we invest. We actually do a contrarian action. We say, thank you for the discount. We buy these awesome companies that we want to be part owners in. And when the market is just rocking and rolling, we're all dancing in the street going, look at all the money I'm making. This is great. We got to be careful because these stock prices are a little too expensive. We got to be careful that we don't buy into the hype, that we don't ride the momentum, and then we fall off a cliff. So I created some cash in my portfolio by selling some winners and selling some losers. I've got cash to put it to use. Now, I'm mostly invested. I'm probably 10% cash right now. I try to stay invested, especially in these companies that I just want to be a long-term owner with. Meta is my biggest position. Google Alphabet's my second position. Chevron, Uber, Airbnb. I can go down the list and tell you, where I think these companies, they're going to be more valuable in the future. I want to stay in those stocks, but I also want capital so I can put money into the market and be able to make some fresh trades. So that's what's going on with the market. Any other stocks you guys want to talk about? Looks like I've got some people tuning in. I appreciate you joining. It's pretty cool to have stonks. Let me just put that out there. I've been watching other streamers like Trader Pratt, and man, this is the golden age of investing. I'm 56 years old. Go back 30 years. I was a young professional making decent money, investing, putting money away that I now, benefit from. But investing then, man, it was nothing like it is today. It was a very lonely place to be. You were literally picking up books and reading about companies. The internet was young. There wasn't as much information as there is today. Trades, okay? When I started trading, you would have to, they would entice you you would pay $8 a trade going in, and you'd have to pay upwards of $30 a trade to sell. that's a big in and out transaction fee. So you had to really think carefully about who you were going to buy. And back then, I invested in companies like Disney, Sun Microsystems, Microsoft, and overall, I've done well. But the access to information, the cost of trading, and then now having ability to connect with other investors on stocks and other platforms, it's the golden age, man. You get to find like-minded investors and start to listen to them for ideas. And I encourage you to listen to streamers of all types, especially streamers you don't agree with. Because I've found in my career is when I listen to people that I don't agree with, I usually learn something because I'm not bought into an idea, before they start speaking. I'm actually listening to, how they go about their analysis, why they're forming certain conclusions and thesis, and then I'm able to learn something. So I try to listen to some investors where I don't agree with them to begin with, but respect their work. And I read books on investors. I watch YouTube, quite consistently. I'm sure everybody else does. And I think streamers give us access to somebody who's probably unfiltered and probably more sincere. I know that some of the super investors, they're really protecting their relationships with access to CEOs. Like, for example, Jim Cramer. I think positively about Jim Cramer. Let me put that out there. I think over the last 30 years, I think he's added more than he's created problems. But I would say that Jim Cramer has this cozy relationship with CEOs, and he tends to pump up stocks a little too much. And you know what? That's his gig. He gets access to the top CEOs. He's Jim Cramer. He's very successful. And in certain ways, I get value from Jim Cramer. The biggest value I get is market sentiment because he is very good at describing sentiment in the market. But that's an example of a very kind of indirect, somewhat loaded comment or opinion. Jim Cramer, he might pump up a stock just because he really likes the CEO. He used to say that about CrowdStrike. He thought the CrowdStrike CEO was super cool because he drove race cars in Le Mans. Well, that's great, but I'm not buying CrowdStrike potentially. I shorted CrowdStrike, by the way, made 42% in like 10 days. But I'm not buying a freaking stock because the CEO is cool. So Jim Cramer's love fest with that CEO ended up really becoming a pretty bad, I think, comment that he made out there. But other than that, he's good. But with streamers, I have like a list of these YouTubers and now soon to be stonks streamers that I listen to because I know what I'm hearing. I can trust what I'm hearing, I should say, and I understand their perspective, what they're trying to do, and I get a lot of value from it. So all in all, it's great to be on Stonks. Look forward to streaming with you guys and look forward to engaging and seeing how we can help one another become more capable of investing and making money over the long haul. All right. So what's going on with this market? So we're looking at the 1 day, still in the green, but it's really, we're 15 minutes into the trading day. I don't know about you guys, but I try to stay away from transactions in the first hour of a trading day because sometimes you don't know what kind of market we're going to have in that particular day. There's some cases where, like, I've had stocks that were, I owned the stock and was being squeezed. And the best example is Big Five. So this stock here was squeezed, and I got up on a morning and it's like, okay, I don't know what's going on, but I'm selling. Sold that stock, huge gain, and then walked away. And I'm like, I don't know what happened, but when I'm faced with a huge windfall, I take it. So that's the only exception for the first like hour of trading. I tend to wait for the market to settle down and, hey, what's going on today? Is the bad news that's out there? Because there is a couple pieces of concerning news, but it's not like horrible news, like, oh my God, unemployment's up to 8% or something. No, it's just continuing to build. Like unemployment's going up. Companies are issuing guidance that isn't great. Corporations are laying people off, by the way, like Intel. You can go down the list and it seems like corporations are beginning to sound the, hey, we're going to lay people off, alarm. So kind of like that tension's building. The Federal Reserve is supposed to start reducing interest rates by having rate cuts. And a lot of people feel like, hey, that's good news. We're going to have a lower discount rate. We're going to have lower interest rates. Yes, but it's almost like it's medicine. Don't forget, there's an illness that you're trying to deal with that medicine. So don't forget about the illness. The illness is slow economy, recession. And when you have those conditions, it's bad news. Okay. If we have a recession, it's bad news. It means more people are losing jobs. So they don't have discretionary income. They can't spend as much, which means companies, especially around discretionary spend, discretionary consumers, they don't make as much money. People don't go to the movies. People don't buy cars. They're more reluctant to buy real estate. I mean, it just goes on and on. So the news is bad that, hey, the economy is slowing down. We're going to have rate cuts, which is supposed to stimulate growth because the Federal Reserve is seeing that, hey, we're probably going to go through a slowdown. And inflation now, the good news about the new bad news is that for a couple of years, we've dealt with this inflation problem. That inflation was super high, and oh man, the cost of goods is just going up too high, which was true. And now we haven't talked about inflation a whole lot. It's been tamed. It's under 3 now, which is good news. Good news that the Federal Reserve is not going to increase interest rates anymore to try to control inflation, and that we should be, from an inflation perspective, it should be manageable from this point forward, especially if we're facing a recession. That's going to help with the inflation problem. So that's been a positive that the Federal Reserve has accomplished. The Federal Reserve is going to meet next week and probably make a few statements that telegraph what they're going to do in September with regard to the rate cut. I think what I'm hearing is it's either going to be a 25 basis point reduction or 50. If it's 25, it's probably going to be okay. Like the markets won't overreact. If it's a 50% rate cut, I think it's actually going to drive stocks lower because the Federal Reserve is probably seeing data that's more concerning than we think. Like, oh, we're going into a pretty good recession. So stocks would probably sell off if we had a 50 basis point reduction. 25 is expected. It'll probably be smooth if that's announced. All right. So I don't see any stock symbols being suggested. So I wanted to keep it short and sweet and open up the stock market with you guys on stocks. One more thing to look at. Let's take a look at sectors. I like to look at sectors because sectors kind of tell you, is there a rotation of, stocks being sold off in one space and then going to another? It looks like today the stocks that are performing best are technology. And obviously technology has been rocking for the last 2 years. Number one sector, just kicking butt. And energy is moving. Looks like oil prices. I did look at that earlier. Oil prices are higher, which drive, the big oil company stock prices. Consumer discretionary is up. Financials is doing okay. And down the list, all the sectors that are defensive sectors, healthcare, consumer staples, utilities, they're performing the worst, but everything's in the green. So it's a green day across the board. And that's what I'm seeing out there. So, all right. So, so that looks good. One small business that I'll kind of put out there, BTBT is Bit Digital. I think they've had a really nice week. They're up 30%. Now, why are they up 30%? So I like stories where you have these businesses really drive innovation. And what Bit Digital started as is they were a Bitcoin miner years ago, and they went public. And when they went public, their stock price just screamed up. If you remember, Bitcoin was all the craze. I'm a cryptocurrency investor. I've been an investor for, call it 6 years or so. And I've been a careful investor. It's not like I dove head first and, put all my savings in there. I probably have 8% of my portfolio in crypto, but I wanted to learn, and I've consistently tried to really learn. But I've been invested since about 2018 and really saw that. I kind of kicked myself because you were buying coins for nothing and then they screamed up. And I'm like, man, why didn't I put more money? But it's when it came down, it's like, okay, well, I'm glad I didn't put that much money. Now, these guys, their stock price screamed up when Bitcoin really was being mined at a greater return. And these guys were making more revenue. And they were kind of a one-trick pony. And their stock prices really settled down. Now, why are they rallying at this time? Because if you look at, if you bought these shares just 2 months ago, you'd be doubling your money. Is they announced that not only are they going to be a Bitcoin miner, which they're going to continue to do, and they're also going to support the Ethereum network, and they're going to stake Ethereum coins, is that they got into the AI space by being a high-performance computing hyperscaler. And what that means is somebody wants to build a large AI model can use Bit Digital's infrastructure and build that large language model. All of a sudden, they became a two-trick pony. It's like, oh, wait, now you're going to start having this growth catalyst, which is AI, which is pretty damn hot. And they were able to get a couple of key customers, a couple of good anchor customers, and they really know what they're doing. If you think about the technology that powers AI, it's the GPU technology from NVIDIA, primarily. The technology that powered the Bitcoin mining, GPU technology, primarily from NVIDIA and others. And what Bit Digital was doing years ago is figuring out how to operate GPUs successfully, and also find the best sources for electricity, which is the other input into uh, performing or operating high performance computing. And they were able to find really good markets like up in Iceland. So they became good at Bitcoin mining. And now those, I'm going to call them organizational strengths, are transferable into the AI space. And I think the idea is a good one. Again, I want to buy into this business and really believe, hey, they've got good ideas, man. So having said that, the idea to move into AI, very good idea. And the market recognizes it. And when we look at Bit Digital's fundamentals, right? Okay. I like the company, I like their ideas, but are they making money? Are they making, very good income? So first, their growth. Their high performance computing is exploding. Beautiful. Good job. They're growing 220% in the last quarter, 266% in the quarter before. They're a tiny company, but 200% is 200%. And when we look at cash flow, you got to dig into the cash flow, but you could see that they're going to be cash flow positive if you really analyze their cash flow statement. And I'd have to take you to their website, because one thing that I'm glad that I learned about, cryptocurrencies and mining of cryptocurrencies, because when you look at their statement of cash flows, they actually are producing free cash flow. Because the way that, and let me get to the statement, then I'll explain why, BTBT has been really doing well. And I'll show you where I found an opportunity. Bear with me. I got to find their financials, and then we're going to get deep into BTBT. And I'm having trouble finding their financials. They make it a little bit hard. But the long and the short of it is, when we look at their statement of cash flows, there's a term in accounting. It's called Generally Accepted Accounting Principles, GAAP. And GAAP says that, hey, cryptocurrencies are new. So GAAP doesn't recognize, like, if you earn a Bitcoin, they're like, okay, that's not cash. And it's, to me, it is cash, because I know Bitcoin, and I know you can uh, convert that into US dollars quite easily. It's very liquid. And they basically are misclassifying on their statement of cash flows based on GAAP. They're following the rules. But when you look at, okay, they had to restate their cryptocurrency gains, and it shows that their free cash flow is actually negative, when I believe it's positive. When I look at their statement of free cash flows, let me try to open that up for you. I actually see that it's actually positive. So when I look at, so here's my model that I use to value companies. I actually see that they actually have $8 million of free cash flow, when if you look at GAAP financials, it shows like negative cash flow of 34 million. Well, when you change that around and then you compare it to their very good earnings per share, that's growing at 200% quarter over quarter, and even put kind of a really conservative valuation on earnings per share, they're still very discounted, even after their stock's been screaming up. And you look at this stock, I mean, the story is good. It's been really going up quickly, which is great over the last month. It's been down year to date. It's down, but when you look at really within the year, it's up 100%. And this is all after they gotten those AI customers for their high performance computing business. So this is a little business that came up on one of my live streams, that another community member was like, hey, let's take a look at BTBT. And the more I dug into this thing, I'm like, wow, man, there's a lot of value here. And there's a lot of potential, because their high computing business, these guys are tiny. They can take market share away from the big hyperscalers, which is AWS and Microsoft Azure and Google Cloud. And those guys won't even notice it, because these guys can triple in revenue size, and those guys will not even notice them. They can grow. Their addressable market is massive, and they have specialization. They know where to find electricity at a low cost. So that was one of the nice finds this week. That was a fun stock to follow this week, and I'm glad that they're doing great. It's up 29%. I'm glad I bought shares before this uptick, and we'll continue to buy shares, because these companies here, I think their momentum's not going to stop. I think they're going to keep going up. So that was a fun one to deal with this week. The other fun one was our friends over at Zim. I don't know if there's any Zim investors out there, but Zim's another story where the market, these guys are in ocean freight shipping. They ship big containers from different places, let's say China to the West Coast of the US or the East Coast of the US. And the market, when we were having those supply chain issues, the market just really improved their stock price. They were a 600% gainer. And then we realized that, okay, those supply chain issues are being relieved. Shipping rates began to fall. And the market sold this stock off by 92%. So 8 cents on the dollar. But if you look at the year to date, this has just been a great winner because the business stabilized, shipping rates began to rise. These guys were really set up nicely. They bought new ships when they had all that cash from the big windfalls of 2021. And it's been a big winner for me. And they've had a very nice week. I think they had their earnings on Monday and they really screamed up. And now they've settled down. So that's interesting. They're down over the last 5 days. But over the year to date, it's doing great. I bought shares when the buying was good and sitting on a nice gain. So Zim's been a nice winner. And there's always value in the stock market. You just got to find it in the right places. And sometimes you need to be a contrarian. You got to understand that the market is irrational at times. It just takes a company that has value. And keep in mind, Zim's gotten stronger and better, bought new ships because they drove so much free cash flow during this era here. Their cash flow rate, they were producing like half, like their market cap, they were producing 50% of their market cap in free cash flow one year and like 25% another year. I mean, that's tremendous cash flow. And they took that cash flow, they bought new ships, they announced huge dividends to the stockholders. And then the stock market was like irrational. They kind of gave up on the stock and let it really go down in price. Well, that's an opportunity. If this is a healthy business that I want to be a part of, thank you very much, stock market. I'll take that discount and I'll make some money. So that's been a fun one to track. So good winner this week. Let's take a look at the stock market once again. Looks like the market's gotten a little fuel. It's up. It's up to almost 1%. We're a half hour into the trading day. So looks like the market's going to stick to this gain. Interesting. All right, everybody. We've been going about 45 minutes. I don't see any additional comments. I appreciate you guys tuning in, and I appreciate Stonks providing the platform. Everybody, have a nice day. Good luck today. Hopefully you make a lot of money. Hopefully it was a positive week for you, and I hope you have a nice weekend.